Hello and welcome to Topical Tax Tips with me, Bernard Critchley, Tax Manager at Aspen, Waite. Today I want to talk about inheritance tax. Particularly I want to talk about some of the exemptions that are available. Firstly, a lot of people will know that we can give up to £3,000 every year completely exempt from inheritance tax, but we can also use last year's release if that hadn't been already used in the previous year. If we're looking to give small amounts, we can give each individual member of our family or other people up to £250, again completely exempt. Particular interest for me, because my son is getting married this year, for people who are contemplating marriage or civil partnership, a parent can give up to £5,000 exempt. I'm hoping my son doesn't actually see this recording, because otherwise he might expect that. But grandparents can give up to £2,500. Anyone else can give up to £1,000. Again, completely exempt and not part of the normal inheritance tax structure. One of the things that happens very rarely and ought to happen more is that if you establish a regular pattern of giving from your surplus income, then as long as this doesn't affect your usual standard of living, then that again can be exempt from inheritance tax going forward. Certain larger gifts that don't immediately benefit from those exemptions can be made, and they'll be treated as partially exempt transfers at the time they're made, and they will then become fully exempt if the donor survives 7 years after making the gift. Should that not happen, then the inheritance tax may become payable because that gift would then form part of their estate. I don't want to complicate matters further today by giving you lots of information, but I would also mention that some gifts of business or agricultural property may also qualify for exemption, depending on certain rules. And obviously we can get further information to you if those things are important to you. I want to conclude this small talk by talking about wills. Despite a surge in will writing in 2020 as one of the impacts of the coronavirus pandemic, it's estimated that 2 in 3 of all UK residents, including 42% amazingly of the over 55s, and also 21% of the over 65s, don't currently have a will. It's also important to regularly update the wills to take into account changes in personal circumstances and family events. 1 in 10 wills are estimated to have not been updated to take into account either the birth of children or grandchildren. Dying without a will can lead to unnecessary complications, especially for children and grandchildren who don't necessarily inherit what the parent or grandparent actually wanted them to do. So it's important for everyone, irrespective of whether inheritance tax is at issue, to have a valid and up-to-date will. So these are just a few of my rambling thoughts for today to do with capital taxes. Hopefully this will be the first of a number of small talks that I'll be able to give you on topical tax tips to help you with your own planning. And as I previously said, if there's anything that we can help you with, then please contact us in the normal way. Thank you ever so much for listening to me, and hopefully I'll be with you again shortly soon. Thank you. Bye-bye.